Welcome back to another episode on my podcast. And yeah, today I'm joined once again with William. And today we're going to be talking about stonks. Uh, yeah, and how it's been super volatile for the past March and February, basically. Yeah, it should be fun. We should be really fun to talk about what's been going on, kind of laugh at how everything's been dying for the past 2 weeks, 3 weeks, and yeah, should be good.
hmm All right, yeah. So it's great to be back with Austin. I'm interested in hearing what he has to say on the topic we have today. It's a little bit different than what we've talked about in the past, but I think it's pretty related to the things we've been talking about too at the same time.
Yeah,
Um, so it should be an interesting conversation, and I'm looking forward to it.
yeah. So let's get started, right?
hmm
So I think like the first thing to really look at is like I think is like S&P and like the more collective stocks or just a bunch of stocks that are more collected and it's more balanced, for example, like S&P or Nasdaq or even SOX, which is like the microchip industries collection of stocks. And so yeah, I think we could start with like S&P 500. I think that's a pretty consistent start and since around early March, late February, where it went from all-time highs of around 6,000, around 6,100, and now it dropped to around 5,500. Now it's back up to 5,680, and this is like one of the most violent drops we've seen in a while. And it's of course it's coming back up rather quickly, so it's nothing. I don't think America's ruined, but I think it kind of indicates like things that's been going on. Because beforehand, I think the reason why S&P 500 was like finding new all-time highs was because like every other stock besides like the Mag 7, which is like the seven main stocks that kind of run or determine the economy or the stock market as a whole. That's Apple, Tesla, Meta, Google, stocks like that, like really big influential stocks. And they just haven't been performing this year. And even so, like for the first month, especially January, like S&P 500 landed on like I think it was like a plus 2% on like it ended on like a positive. And I think from there, I think many experts are like, this is going to be one of the most volatile years of all time and be prepared. And it was. Uh, I think the best way to look at that is the VIX. It's basically volatility. It's like the volatility of every stock in the S&P 500. And it's basically like an indication of how people view the stock market right now. And if it's higher than usual, that means people are saying this is going to be like people are really scared. If it's lower, then it's going to be a more stable market. And right now it's like at 21, but during the apex, especially when people were like actually dying, or, like sorry, when people were like actually freaking out around early March, late February, it was around 22, 23, and eventually like later in March, it was around 30. And I think it's calmed down then, but it's been a crazy couple of weeks and yeah, it's been really weird.
hmm Yeah, it's been a pretty crazy time with the market right now. Do you think do you think people should be worried? Investors should be worried right now?
Uh, in my professional educated opinion, no, I don't think, because like based on like past history and like previous examples and like actual experts, everyone's stating that it'll eventually be fine. It's just like the jump scare of from tariffs and the Fed in general, and, like sudden like inflation, like taxes as a whole. I think it's just like I think the main thing here is that the semiconductor market has been determining like the entirety of the stock market for like the past couple of years, and if that goes up, then everything goes up. If that falls, then everything else falls. And in the past like month or so, uh S&P or like SOX, which is like S or the superconductor market, it's been crashing. So I think that's kind of the main reason why like the markets have looked so bad, especially with like the Mag 7 just not performing as well. Tesla's down 40%. Uh Meta's down, I think, 10% as well. It's been kind of falling apart ever since it got to its all-time highs of I think it's like 770 or something. And it's kind of just been falling really quickly. But yeah, I think it's not a worry. It's just kind of a big scare, especially it's been climbing up really quickly the past week or so. So it's definitely not like it's not something to be scared of, but it's not something to take for granted and be like, oh, this is everything is fine.
Hmm. Okay. What do you think has caused it?
Uh uh I mean, I think like the main thing is just that like for the entirety of January, like we were supposed to be in the red, but then like several software stocks decided to be incredible and have incredible earnings and just be incredibly like efficient and incredibly good with their revenue and with their stats. And that kind of jumped the stock market a little bit to make it land in the green. And then eventually that sudden outburst stopped. And it's like, oh, now they're not having one of the greatest runs of a company in a really long time. It's kind of like slowing down a little bit, and now it's just, well, the Mag 7 aren't performing. The other stocks aren't doing exceptionally well. There's not much to really lean into, so now it's just kind of where it is now.
Okay. Well, why do you think, or do you think that's the only reason, or what other things do you feel like are impacting the market right now? Because
I
it's
mean,
not just like tech stocks that are crashing, right?
yes, it's yeah, I think it's a lot of things. I think the main thing is like tariffs, especially
Mhm.
with especially with like how like unconcerned the Fed has been, or the government has been, or the Treasury has been with like stocks suddenly crashing. They focus so much more on bonds, or they've still focused more on like stable bonds and like bringing everything back to the US. They're kind of saying or telling the public that yes, everything is crashing and burning right now, but it'll be fine in like 3 months when all the companies are back and we can suddenly have this crazy economic rise and this crazy economic run. I think the main thing right now is that like the government doesn't really care that the stock markets are crashing because they trust that it'll be fine in the future.
Hmm. Okay. Well, I think that's like I think that's interesting. Like I don't think it's I think you made a good point there or an interesting point there that the government isn't doesn't really care. Because it seems like Trump doesn't really care.
Yeah.
Like he's like even on like I think there have been recent comments where he's talking about the economy and he's saying it's doing great. Meanwhile, it's on like the like a week into just big dips in the entire market,
Yeah.
right?
Yes.
To him, it's almost as if it's like not happening right now.
And that's really concerning since he's the president. But
Mhm.
what can he do?
I'm sure I feel like he, like you said, the tariffs have a big impact on it. I think if he canceled the tariffs tomorrow and said, I'm never doing it again, we'd see a big day of growth almost immediately.
Oh, if that happened, like we would I we would like rise like 20% instantly. It would be amazing.
Like, I don't know if it would rise back to where it was immediately,
Yeah.
but I think it would at least be like one big green day if he said that, right?
Yeah. Just
Mm.
I just having just having letting the population, the casual investor know that uh the government supports and like is wanting you to thrive and they're actively trying to like make or trying to make it like more stable. I think just having a more stable environment, more stable economy would make like the average investor so much more confident in like their positions, and that I think that would be really beneficial.
Yeah. Okay. Well, you mentioned tariffs earlier, right? So why do you think the tariffs are having such an impact on the market?
I think like just the fear factor and like the uncertainty factor alone, along with like the idea that, eventually companies are gonna have to like go back to the US and that transition is gonna cost a lot of money. That's gonna be like a really bad thing. But I would
Hmm.
say like the main thing is that like the fear factor of people looking at these companies trying to move and trying to move back to the US or in some cases just like not really do so. It's just like really uncertain, unstable. I think that's like just not good for the market as a whole.
Yeah, I
And
think. Hmm.
sorry, go on.
No, yeah, no, I think what you're saying is really right. Like I think the tariffs are definitely reducing like a lot of the consumers' confidence.
Mhm.
And then because stocks, it's like the stock is worth how much money the company makes, right?
Yeah,
And so, just the idea of tariffs is pretty much guaranteeing that most companies aren't going to be making as much money,
yeah,
right? Like every quarter there's an earnings report, and then if a company's revenues are lower than their past one, the company stocks almost always take a dip. And then if it's higher, then it always goes for a big rise, depending on how much higher or how much lower it ends up being.
yeah,
And I think with the tariffs, it's making everybody assume that the revenues are all going to be lower,
yeah.
right?
I think it's a very like fair analysis. And I think another thing is like it's just really like bad timing. Like this is kind of where for the past couple of years, chip stocks and like AI or like companies with AI, they've kind of been like moving really steadily at like a really consistent rate. And for the first time in a while, like Nvidia has kind of peaked at 140 and like had this massive scare of DeepSeek, and now it's at like 115 range. It just hasn't really moved. It dropped like 108 at one point, and it just like it feels like it's kind of plateaued in a sense. Where like consumers are now like looking at AI as a whole and like the chip market as like, okay, this is a really cool idea. Make money, please. It's just like it's kind of like happened with the internet like back in a long time ago. Like it's kind of like that idea again where it's like internet is a great idea. It's a phenomenal advancement, phenomenal innovation. How do you make it like make money? And I think it's kind of come to like the same point in history where the concept, the idea is amazing. It works in theory. Now you just have to like make it. You have to monetize it and like make it work in practice. And I think just that, along with like the uncertainty of the tariffs and Trump as a whole and the U.S. as a whole, it's just been pretty pretty scary.
Hmm. Or a lot of people also say that the market, or especially these tech companies, was overvalued
Oh,
as
of course,
well.
it was it was crazy. I think one of the main things was like Palantir. Like it was like I believe it was like 111 times its revenue. For context, like the average company is like 20 times. So it was like 5 times more overvalued than the average company, just because it was like a really cool tech company. And
Yeah.
it's yeah,
Hmm.
sorry, I interrupted you.
No, you're good. Yeah, no, I think you're right. Like a lot of these companies were really overvalued, and I think a lot of people look at it as kind of a needed market correction,
Hmm.
right?
Yeah.
Because even though, it's kind of normal for the US to hit all-time highs, a lot of, the stock market, but at the same time, we have been hitting all-time highs like at a much higher rate than in the past,
Yes.
right? Especially considering like COVID just ended not long ago, and then COVID made all the companies go down a lot, and then I don't think all the companies recovered have even recovered completely yet,
Mhm.
but their stocks definitely did recover completely
Yeah.
and even hit, all-time highs.
Yeah. Stocks are more dependent on like public perception than
Mhm.
and I guess like revenue itself, but mainly public perception more than like actual results. And I think we're getting to the point where consumers are kind of like done being blindsided with like theories and hopefuls. I think they want like actual results, and that's kind of okay this correction in the stock market.
Yeah, no, I think that's super correct. I think a lot of people forget that, stocks are just mostly based off of perception, right?
Mhm.
Some people think of it as like, what the company's worth, but really it's like what do people think it's worth and what people are willing to pay for this stock, right?
Yeah, it's
Is how
all
the stock is worth, but people don't think it's worth that much anymore.
yeah,
Mhm.
yeah. It's all theory. That's the main thing. And so yeah, I think it's a pretty good like a analysis, brief summary of what's been going on with like the stock market as a whole. And I think that I would like to talk about a few stocks that are really funny to look at in terms of charts and technicals, and just like some of them are just extremely interesting to talk about, and some of them have really nice storyline. So yeah, I think the first one I want to talk about is super microchip or just SMCI. And like I think this has been one of the things or one of the more talked about stories that's been going on in the tech world, where SMCI, it's basically a company that makes coolers and kind of makes infrastructure for microchip companies and like Nvidia or uh Taiwan's microchip thing. And it's just been and it used to have crazy value, but due to like a jump scare with financials a few months back where it like the stock just plummeted like crazy to like almost to nearly like $20-ish or something, and it was just crazy just having it be that low. But yeah, and then eventually jumped back up. But I think like it's just been really a really fun storyline where yeah, it eventually like got rid of its like financial issue where everyone is saying, okay, if you don't finish or if they don't like correct their issues with like finances and like corruption and stuff like that, they could be like delisted, which just means like you can't trade the stock anymore. And if you have any shares, it's just sitting there and you can't do anything with it. And if it got past that jump scare, it would be fine. And it did. And now it has become like a really prominent figure in in the new age of like microchips. And it's just been a really nice storyline. And not that it's dropping like a really crazy, it's kind of a bit kind of like a really weird place to talk about it. But yeah, it's just been a great story and it's been really nice seeing it kind of rise back up.
Okay. Well, how do you think this story fits into like the broader context of the market?
Ooh, I would say like especially in January, it rose up to almost 60 and now from I believe like 18-ish dollars, and it went up like 3x its value, and now it's like kind of going back down to earth with like the slump in the stock market as a whole. But I think yeah, it's just been I think it kind of shows that there's still a bunch of hope and promise in microchips and AI as a whole, but I think I would say like the song definitely showed that like consumer want or consumer like belief has kind of slowly wavered, where it's like they want to see this thing actually be used in practice.
Hmm. Okay. Pretty interesting. I don't really know too much about that stock, but it's pretty fun to learn about it.
Yeah.
Yeah. Were there any other stocks in particular you wanted to talk about?
Uh, yeah, I guess Nvidia, I think that's been it was a huge story a couple of years ago. And then yeah, recently it's just been or some recently it's been pretty interesting to talk about where of course it had this DeepSeek thing where everyone just panicked because apparently DeepSeek wanted to they like were too efficient with microchips and that would somehow make Nvidia less worth it because they were too good. It doesn't That's not how that works, but I think when people like realize that having better like infrastructure and needing and like being more efficient with microchips isn't a bad thing, I think people realize that okay, this is actually fine. But
Hmm.
yeah, I think especially Nvidia now, it's at 115. It's actually past it's like DeepSeek scare back in January 2024 or yeah, back in January. And I think, yeah, I think it's kind of moved on a little bit. It's just been a very weird time period. And yeah, I would say that
Mhm.
it just, I think this is like basically where Nvidia goes. It's where like the tech industry kind of goes. Besides like Meta or like Google or stuff like that. Especially recently, like depending on Nvidia itself, it kind of directs the entire market. So seeing it like rise and then drop and then rise and drop again, it's just been really nerve-wracking to see the stock market
Mhm.
as well.
Yeah. No, I think it like I can definitely understand people's initial reaction to the DeepSeek and how that caused Nvidia to dip a lot at the beginning, right?
Hmm.
Because I think Nvidia's biggest advantage has always been that they have like the best chip.
Yes.
And then when somebody is met, and also like their valuation was driven a lot because AI people thought required the best chips,
Yes.
right? But then here's a company that says we don't need to use the best chips and we can do it. And that kind of opens up the market to a lot of NVIDIA's competitors who are making great chips, but not like the best chips,
Yeah.
right? So, if people who were doing AI before thought, oh, we have to use the best chips, so we have to buy NVIDIA, right?
Yeah. Which doesn't make sense. Like the best product is still the best product at the end of the day, just because like eventually AI is gonna like get to a point where they need the best chip still. And when it gets to that point, they're still gonna need NVIDIA. So like that being a problem or that being a reason for people to like say NVIDIA is like suddenly not as valuable as before, it just doesn't make sense to me. But
Mm-hmm.
yeah, I think people have like realized that that's a really bad argument. And now it's just like, okay, NVIDIA is just like honestly scary and especially the earnings.
Mm-hmm.
The earnings they were good. They were not great but good. They were above the expected uh earnings and I guess that's just not good enough for like for normal investors because after because people were like piling on Nvidia for saying earnings weren't good enough, basically, even though it was like much better than expectations. So I think like the bar has been set for Nvidia so high that any small mistake is gonna kind of drop its stock by a decent margin. But yeah, we'll see.
Mm-hmm. Yeah, no, I think you're really correct. I think if you think it through completely, like the reaction doesn't really make sense.
Yeah,
But, not that many people had the time to think it through quickly. And if you think it through halfway, it looks kind of bad for
yeah,
NVIDIA. Hmm. Yeah.
yeah. Uh, I think that's kind of it for now, right? Do you have anything else you want to talk about?
No, I think that's good. I think it was fun to get your takes on stocks and everything.
Mhm.
It was fun to talk about something different. And hopefully we can have another conversation about this thing about stocks in the market in the future too.
Yeah, that'd be good. Thank you for being here again.
Yeah, no problem. Glad to be here.
Yeah, and thank you for people listening to this podcast, hopefully. It's Thank you guys for being here.
Yes, thanks for listening. And I think that's it for this episode. And
Yeah,
then we'll see everybody again later for the next one.
yeah. Thank you. Bye.
Bye.